Good morning, everybody. How you doing? It's Bruce here, Uncle Bruce with Stock Markets with Bruce. Welcome to Friday, August the 27th, 2021. Our last
Stock
Friday,
Markets with Bruce.
our last Friday in August. Welcome one and all to the show, to the trading day today. We're going to try to cover the markets in plain English, and let's hope it goes well. We have an up indication right now on the markets. We're showing the Dow up 81, NASDAQ up 42, S&P up 11. And we've been showing this uptrend all morning pretty well. Big day today. The big focus today from all the worrywarts is what we call the Jackson Hole Summit. This is where a whole bunch of theoretically, what would have happened is a bunch of Fed people, policy wonks, all kinds of bond analysts, interest rate specialty people, bankers, all would have congregated this week in Jackson Hole, Wyoming. And today would be and is the speech day, the day that the head of the Fed makes the speech about what they think and what they might or might not do about interest rates going forward. And hence why I title today's show, Will Interest Rates Go Higher Today? This is what everybody wants to know. What is the position of the Federal Reserve going forward regarding interest rates? Will they do what's called the taper? And if so, will there be a taper tantrum on Wall Street? The markets are telling you already there's nothing to see here. There's nothing to worry about here. The economy is not suffering from an overheating problem in the US in particular, in Canada, even globally. The world economy is suffering from a supply chain delivery problem. And there are over 6 million jobs in the United States that have not been recreated, have not been brought back yet from before the COVID crisis. And with supply chain problems surfacing again and again and again over vast numbers of businesses, we have got a U.S. economy that will not be functioning at top efficiency for at least another 6 months, maybe a year. And this can be added on to Canada's problems, Mexico, China, all of Asia, all of Europe. The world economy as a whole will not be firing on all cylinders for at least another year. It takes this long for everything to kind of come back on. And with COVID variants flaring up in various areas, this is mucking it up. And you can thank the anti-vaxxers. You can thank them in person. These are the folks that are unfortunately making it possible for whether they are against the vaccine or not is irrelevant. Those who have not vaccinated are the problem. This is what's possible for the virus to keep finding new hosts to invade. The virus is constantly looking to invade hosts, and if you have not been given the vaccine, the odds of you catching the virus are zillion times higher. And the hospitalization numbers prove it out time and time again globally. And so there you have it. If you're not agreeing with my thinking, okay, fair enough. Don't agree. But the bottom line is that hospitalization numbers are at unbelievable numbers in various areas of the planet, especially in the U.S. Canada has its issues too, and we now have 1,000 deaths a day being reported in the U.S. for the first time since early this year. This is a problem that just will not go away and will continue to plague the economies of America, Canada, Europe, and others, because businesses cannot bring employees back to their offices or back to their factory floors or their assembly areas or wherever they're working. They have to have them work remotely. Certain people out there are doing great with the remote from home work thing. It's fantastic. But others are finding, especially businesses are finding that, yeah, it's okay. We're able to get our admin work done from home. Our auditors, our accountants, our analysts, but our hands-on workers. We need them together to coordinate our assembly of whatever we're making. This is the problem, and this is where we're having issues. And so this doesn't end the supply chain delivery issues. This is just going to exacerbate it. And the thing that is should be right front and center to everyone out there is, it's not that this is a problem in Milwaukee or in Boston or in Atlanta or in Miami or in LA. This is a problem in China. This is a problem back in China. We have got the world's largest container ports shut down in China, where they have total control over everything. I mean, right down to practically, what you are thinking is a crime if you're not thinking properly. If you admit to a friend that you're thinking of, you think that the Western economy is a way to go, and the Chinese Communist Party doesn't think that that's the way to go, you're going to jail to be re-educated. We're going to re-educate you to get your head straightened out. You've got scenarios in China where factories and cities and ports are shut down. If it's happening there, that is supply chain number one. Supply chain problem number one. If you can't get raw goods out of China to the Western world, the rest of the trading world, every country in the world is going to have supply chain issues. And this means the economies are not firing on all cylinders, which means the US economy, the Canadian economy, the South American economies, Africa, Asia, Europe, everywhere will not be running at 100% efficiency, which means we will not have all people back to work as expected or as hoped, which just leads to companies not delivering the bottom line results that they had thought they could deliver by now, after a year and a half of this whole thing. Anyway, there it is. That's the thing. I wanted to mention one other thing this morning before I get too far into this. Any political comments I see coming through here, I'm putting you on a timeout. And if you keep it up, you're out. I'm going to kick you out. Whether you're a member or not, I'm not interested in seeing any political comments here this morning. I'm fed up with it. I just don't need it anymore. So I'm trying to just tell you in plain English what's going on with the markets and the planet. But if you folks are thinking that this is an open forum to attack the current administration, the prior administration, to air your political grievances, I'm kicking you out. It's out there, and I've had enough. Welcome to the channel, but respect it. We're here to talk business, and we're here to talk the markets. I'm not interested in talking about Trump, Biden, or anybody else. I'm just not. Thank you. Let's see what else we can do. The markets, like I say, are up 72. The big markets are saying to the world, yeah, we know that. We know about supply chain problems, and everybody's got their reasons why and whatever. But we investors, and this is a reflection of what investors think is going to happen in the next 6 months to the next year from now. Investors believe that even with all the issues going on in the world, that business will continue to do okay. And markets are at all-time highs. They're within 1/4, 1/2 of 1% of all-time record highs. This is telling me that the investors out there with dollars are quite comfortable to be in the stocks they're in, to be in the markets they're in, and they're prepared to tolerate whatever the economy has to throw at everybody in the meantime. And this talk coming out of Jackson Hole about the possibility of higher interest rates does not seem to be phasing anybody. Doesn't phase, let's put it, not phasing enough people to cause a commotion on the markets. How about that? There are people who are upset and worried all about interest rates, all worried about inflation rates, all worried about supply chain problems, all worried about but the indexes, the Dow, S&P, and the NASDAQ, they're telling me, as an observer of this since 78, all is well. It's not bad enough. Whatever's out there is not bad enough to upset the apple cart for future earnings. And as long as interest rates are virtually zero and on an inflation adjusted basis, interest rates are negative. It's cheaper to borrow money than to keep up with inflation. That means interest rates are negative as a whole. Business can thrive in this kind of environment, absolutely thrive. If rates are this low and capital is this available from central bankers around the world, the economy will do just fine. And corporations do not have to pass much of a smell test to make you money. I remember back in the 80s and the 90s, it used to be that if you had a company make 5% more money every year than the year before, the stock would go down. Why? Because inflation was 8%. You had to make at least 8% more money this year than last year to maintain your company's value relative to inflation. If you at work were getting a 4% raise from your employer was slapping you with a pay cut. They were basically saying to you, thank you for coming in. Thank you for working your butt off 40 hours a week or more. Thank you for taking all the abuse that we heap on you and all the objectives we throw at you and all the productivity gains we want you to produce and all that crap. And here's 4% more money for your troubles when inflation is 8. That is a pay cut of 4%. That is an employer saying, screw you. We got you by the short and curlies. You have to come in here. You can't find a better gig anywhere else. We are prepared to risk losing your services. Here's 4%, piss off. And very few employees would walk. And in the US, in many cases in the US, the problem for a lot of employees, they couldn't walk because they had had an illness 2 years ago, were covered under insurance for the illness, and they're now labeled an individual with a pre-existing condition. And if you leave your employer and go to another employer, whether it's in the same city, same state, another state, you can't get health insurance through your new employer because you are deemed to be uninsurable because of a pre-existing condition. And in some cases, women were finding that because they had a child, they had a pre-existing condition and now were no longer eligible for certain kinds of health insurance anymore. This kept people locked into their employers and unable to leave because the cost of medical insurance that they had to pay for themselves now was so exorbitant that even if they got a 10% pay increase, they would be less well off. And this was the nightmare that Americans were facing that most other countries don't have. Canada doesn't have this. European countries don't have it. The G20 out there, when you have national health insurance, there are no pre-existing condition limitations. And so as a Canadian, you can move from St. John's, Newfoundland, or Halifax, Nova Scotia, to Vancouver, British Columbia, 5,000 miles west, and you're covered. You're covered, and that's the end of that. A big difference between someone trying to get out of Boston or someone trying to get out of New York or someone trying to get out of Newark, wanting to go to Atlanta or to LA or to Denver or to Seattle. You couldn't have employees move because they couldn't lose the coverage. Now, it might not be for themselves. It might be for their family, their wife, or their children. But there were all of these reasons why Americans could not shift employers to make it a better life for themselves. And this healthcare thing was a nightmare. It still is. It's a little better now, but it was really bad in the 80s and the 90s and the 2000s. In any event, the market today is saying, hey, we're okay. We think a year from now, companies competing with a 0% borrowing cost and virtually a very low inflation, even though there's spikes here and there, overall, companies can outdo that. Back in the, like I say, back 15, 20 years ago, companies making 5% more money every year, the stock would get hammered. There would be a sell recommendation. There would be analysts telling investors, avoid this company stock. They don't have what's called pricing power. They don't have the ability to pass on price increases. If they do, they lose market share. If they lose market share, they lose gross amounts of business, which means their expenses are a higher percentage of their gross intake. Even less profitable company. Don't buy this stock. Where today, a company is going, if I raise my prices a half a percentage point every 6 months, if I raise my percentage, my prices by 1% every 6 months, I can get away with it. And Only a portion of that is eaten up by inflation. The rest is net profit to the house. Our efficiency rating keeps climbing up. Our stocks will go higher. This is what's been going on. Of course, PE multiples are another indicator of how stocks are going to trade at. It used to be that if you had a PE multiple of 12 to 15, you were kind of at the top end. Anything over 15, 16 PE multiple, that was expensive. Over 20, unthinkable. Today, we're looking at stocks like Apple and others who are trading in the 30s, and then they come up with earnings reports that just blow the doors off the estimates, and that brings the earnings multiple back down into the low 20s. But low 20s is historically very high PE multiples. But against a zero interest rate environment or close to it, and a relatively tame overall inflation scenario, and with supply chain problems, this will likely continue. See, companies can compete with bond funds. Remember, back in the you may not know this, those of you who are younger, but 15, 20 years ago, before the low interest rate policy was adopted as the normal that we have right now, and all of you growing up who are 35 and younger, 40 and younger, probably, if you're 40 now, low interest rate policies started at least a decade ago. So by 30, and that's when you kind of came out of school finally, roughly, and started entering the workforce. You've been in a zero interest rate environment almost your entire working adult life. Almost. Certainly 35 and under, no question about it. So you guys do not know and have no concept of what normal actually is in the economy when I talk to you about competing with bonds for investors' attention. Because right now, a bond that is being issued paying 1.5% interest is not getting a whole bunch of people excited out there. But when a bond used to pay 7, 8, or 9% interest, and a publicly traded company with common stock had a yield of 4 or 5%, the investors are going, well, hey, I can buy this company's stock and get a 4.5, 5% yield, or I could just buy the bond of the same company or a company like this company, and I can get 6 to 8% interest on my money on the bond, and I have more rights as an investor. If there's ever a problem with the company, bondholders have precedence over common shareholders. Why would I buy stock that's giving me 4.5, 5% yield when I can buy a bond and pull in 7 or 8? And if the government of the United States, or the government of Canada, the government of the UK, government of Germany, if they can hand me 6% interest, 6.5% interest, corporates pay me 8 or 10, why wouldn't I give the USA government its money at 6 instead of buying a stock that gives me 4, 4.5? This is the war, the battle that was going on through the 70s, the 80s, and the 90s, and the 2000s. Governments were already running deficits back then. This deficit thing isn't new. Governments were running deficits back then, and they were competing against the corporate world for cash from bondholders. The bond business was incredibly competitive between governments and business. And the governments that could really keep their spending in check and their revenues okay, they're the ones whose economies did the best, because there was less pressure by these governments for capital against business. And so business could borrow more easily, and maybe a half a point cheaper or a point cheaper than other jurisdictions. Businesses in this region would do better because they didn't have as high a bar to compete up against as other jurisdictions. So when the US economy and the Canadian economy, the British economy, when our interest rates in the 70s and 80s hit upwards of 18 to 20% for you were paying a 13, 14% mortgage on your house with a 5-year term before you could renegotiate, and people were willingly signing up for this. You have a corporation that's trying to compete for capital to expand a factory or build a distribution center or whatever you're trying to do with your corporation. You have to show investors why they should invest in your company, as opposed to just putting money into the mortgage market. Why shouldn't I just lend my money to a company that lends money out for mortgages at 14%? I'll get 12 of the 14. They take 2 to handle it. I get 12% on my money from a whole bunch of mortgages. Why should I lend you money as a corporate borrower at 8%? I don't see the advantage here. Because I'm going to invest in your company that if you don't raise this money, and even if you did raise this money and you built this addition to your company and it doesn't deliver a 15-20% return, there's no reason for you to have built this thing in the first place, which means you shouldn't have borrowed the money in the first place, which means the bond might be in trouble because the stock might be in trouble. Why would I play that game? I'd rather lend money to a mortgage broker who then relends that money against real estate that's already standing there, like homes and office buildings and strip malls and so on, because I can seize that asset and the land as the mortgage holder as my protection against lending out this money at 12%. This was part of the competition. Government was desperate for money to handle their deficits. That was competition. And the corporate world and the stock market was under unbearable pressure to deliver phenomenal results every quarter, every half year, every year to maintain their standing. Today, you look at this market, heck, man, 4% yield on IBM stock, 4.5%. That's unbelievably high. It's incredible. You buy IBM stock, you're getting a 4.5% yield. That's outer space interest rates. That's crazy. The U.S. Treasury only pays 1.35% for 10 years. Japan pays 1/100th of a percentage point. Germany pays 0.5% negative on its money. That's how free money is. That's how much money there's going on. Why are the markets at all-time highs? Now you know. The stock market is competing against nothing. It's competing against nothing. There is no bond market that the stock market has to compete against anymore for your money. It's easy to raise money. I was just reading this morning about an hour ago, Apple. I was looking at a filing on Apple. This has been out a couple of weeks. It's nothing new. Something like $5.5 billion was raised by Apple about a month or so ago. Again, another $5.5 billion. Apple has raised money like you can't believe. They are issuing bonds that are good for up to 50 years. I said that right. Apple is issuing bonds that mature from about 5 years, 10 years, all the way up to 50 years. 2061. You can buy a bond right now from Apple that they will pay you back in 2061. And they will pay you interest right now on that bond of about 2%, 2.25%. You can get, you give Apple money for 10 years, they'll give you 1.5%, 2%. You give Apple money for 3-4 years, they'll pay you 0.5%. There are bonds out there that Apple has issued that are paying less than a percentage point on cash. Why does Apple need to raise money? They don't, but they do. And why are they? Because they're not going to pay U.S. taxes. This is an American company out of Cupertino, California, a beloved company around the world, adored by its customers. These guys would rather borrow $100 billion offshore through bond issuances, or well, actually they're borrowing it domestically. They're borrowing money through New York bankers, Goldman Sachs and JP Morgan, all the big boys. They're raising all this cash for 0% to 2% interest up to 50 years out to do what with it? Buy back their own stock. They're just buying back their own shares, and they're reducing the number of shares outstanding every quarter, just by little by little by little. Might be 0.5 percentage point per quarter, maybe 1% per quarter. They're borrowing the money, they're paying the interest, they're writing the interest off as a deduction against U.S. income, so they pay less in taxes to the tax man. They're not using any of the cash they have offshore in Ireland or anywhere else. They have 200 billion, whatever the number is. It's a staggering number of billions of dollars offshore. They could use that money to buy back the stock. But in order to do that, they have to first, technically under the IRS taxation rules, they have to repatriate the money back to the U.S. before they can spend the money to buy back their own stock on the U.S. markets. If they do that, they have to pay income tax on all that money because that is deemed to be profits earned offshore. So they bring back $1 from Ireland back to the United States, 32 cents goes to Uncle Sam. That's you, America. That's the public. But the American public will not get that money because Apple will never pay it. Apple will rather borrow money from Americans from pension funds, hedge funds, mutual funds, ETFs. They will raise money from bond funds in America, which are lined up at Apple's door to lend them all the money they want because it's as good as it gets. It's more solid than the United States of America. Lend Apple all they want to borrow. Let Apple write the interest off against US income, keeping taxes down, 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 not pay any taxes on foreign money earned, and buy back their stock. The shareholders of Apple are delighted. Shareholders of Apple couldn't be happier. This is beautiful. The fact that we're screwing our own country, well, what are you going to do? It's business. It's nothing personal. It's just business. And this is done by all large corporations that have global operations. This is not just an Apple thing, it's everybody else. We only talk about Apple because it's the big one. It's the one that's you can't miss. So when you're up against zero interest rates, zero inflation, zero competition from the bond market, it's easy for the markets to be at all-time record highs. And that's what we have here. This cannot last. Eventually, it doesn't last. Eventually, the equilibrium comes into play, and there will be an equilibrium. It's only a matter of time when eventually the central bankers are going to stop flooding the market with cash because they're going to say to the market, you got to work on your own. You don't need us artificially anymore. We can now back off and we'll stop putting money into the market and we're going to start to take money out of the market. But too many worrywarts are still around, like maybe not like me, but they look like me. They're old. They don't have any hair, or whatever hair they have is white. They have wrinkles. And they talk about the good old days from the 60s, the 70s, and the 80s, which turns off so many of you out there. These worrywarts are the ones in charge of the trillions of dollars that are being monitored and babysat on behalf of retirees globally. Generally speaking, pension funds and central bankers and big time highfalutin chairman of the boards of these huge investment banks, you might notice that they have a similar trait. They're almost always male, but even if they aren't male, they're older. They're in their 50s or their 60s or even their 70s. And then with Mr. Buffett, they're in their 90s because they just don't want to stop. You have got the seniors, the folks with all that experience, sitting at the top end of these entities, and they're looking at the long-term picture, and they know something. They understand something, and they admit it to themselves. They know they have a limited amount of time before they're gone, because they know all of us have friends that have left us already. The older you get, the more lonely you get, because you're finding out that a bunch of people you used to know, they're not alive anymore. And as you age, this continues and accelerates. They know that, but they also remember what it was really like over the last 150 years. And history has a nasty habit of repeating itself. And one of the things we're going to come into is where we have a reduction of capital going into the markets willy-nilly. And we're going to get either an inflation environment kicking in, higher interest rate environment kicking in, and there's going to be failures. There will be winners and losers who can handle or not handle the new normal that will be a new normal. There is always a new normal every so many years, might be a decade or two or whatever it is, but through certain cycles, there's a new normal. And at the moment, the normal that we're used to, and many of you who are, again, my audience members, many of you are under 50. And if you're under 40, you only know one thing. You've grown up through high school and college and your work environment with zero financing on cars. You've noticed that you can almost always get a loan on a car for almost nothing. You've noticed there's always a rebate when you buy a car, almost always a deal, a package, something. You've noticed the interest rates on houses are usually under 4% almost all the time. They're 3-something or 2-something. In Canada, we see mortgages for 25 years from 1.25% to 2.5% normal. That's like boring, like, oh, so what? Everyone's got that mortgage. You all have noticed that. You've also noticed you've been beneficiaries of an open bank policy where the money supply is allowed to rise to stimulate the economy. Bankers fear recessions. bankers panic about a depression because bankers know that if there is a recession or a depression around the corner, there will be failures of entities that can't pay. Now, there's usually every year companies go under. This is nothing new. We hear about bankruptcies all the time. But if only 1% of all companies go bankrupt from time to time, that means it's a 100-year turnover of bankruptcies. That's acceptable in a 4%, 5% economy. You can handle 1% failure rates if you can at least charge 3 to 4% interest on your money. The problem comes when you have a 4 to 5% bankruptcy rate and you can only charge 4, 5, or 6% on your money. Now you have as much money being lost as all the money you're making to replace these losses. And the losses could accelerate beyond that, certainly over 10, 15%. You get that going, where 15% of all loans are now in trouble. In other words, they could be completely going into default. And then another 15% of loans on top of that are on watch. They're going to be in trouble. You have a banking business that might only be operating at 50% solid ground, and the other half is subject to interpretation. That is bad news. That's when cost of money skyrockets because now every single borrower is viewed as a possible nightmare client. Right now, banks are begging you to come in. There are bankers offering you guys zero interest rates on new credit cards. They're offering you 10,000 points, 50,000 points, this, that, all kinds of features. Come on in and shift your account over from another account to us. We'll give you zero financing for the first year that your money is here. We'll give you this, we'll give you that. It used to be toaster ovens, used to be mixers, mix masters and all that stuff, blenders. Now they're offering you airline points. Here's $1,000 in travel credits if you open an account with us right now. $1,000, unbelievable. In Canada, you can get up to $400 in cash delivered to your account if in 90 days you open up an account. In 90 days, in that period, you set up electronic banking and all that stuff. They'll give you $400. Of course, they are going to try to charge you $20 a month for your banking services, so they're gambling that in 20 months they got that $400 back, and then they've got your business on top of that. It's just business. It's nothing personal. It's not that they like you and they want to give you $400. They're gambling that they can make more than $400 off your butt over the next 5 years. They are investing in you for potential upside, and they're hoping that if you open an account with this bank, that you'll get your credit cards through these guys, you'll get your mortgage through these guys, you'll transfer debt through these guys. When you get a new car, you're going to pay cash for it. You might borrow money from them instead of taking a zero dealer financing. Who knows? They want all of your business. And in the end, they want your wealth business. They're hoping that you, as a middle class individual, for the first 15 years of your adult life, from 25 to 40, you will borrow, and then pay. And then by the time you hit 50, 55, you're now saving thousands of dollars a month because you have equity in your home. You've paid down your mortgage to a ridiculously low amount of money. You're taking home equity loans for improvements, for this and that. They're making money left, right, and center, and they're now helping you with your wealth management overall. In other words, they're trying to sell you their mutual funds and make money on the high end as well. That's what bankers are doing. And right now, a very high percentage of borrowers are solid gold. They're looking at you as an employed person. Heck, you've been working for 3-6 months. Come on in. Hey, you can borrow money from us. We have money to burn. We got cash lying around every night. $1 trillion plus of cash that can't be lent out is being sent back to the Fed for overnight, the overnight window, they call it, where overnight the money goes into the Fed and the Fed pays overnight interest, and the next morning the banks take the money back out again and try to lend it. The problem is that deposits keep coming in more than they can lend out. The bankers are piling up with cash. Americans right now have over $17 trillion of cash in their savings accounts through their own personal accounts and through their small businesses. Americans as an average, as a whole, are drowning in money, and they are not spending it. They're not even investing it. They're just letting it sit there for a rainy day. That's the mentality. The markets are up to record highs right now, knowing all of that. And to add even more fuel to the fire, the U.S. federal government is, for the first time, stepping up and say, all right, enough's enough. We haven't had an infrastructure program for 20 years. It's been what, 4 presidents? This is ridiculous. We have potholes the size of Virginia throughout the USA. We have bridges that are on the verge of collapse. We just had to shut down that bridge across the Mississippi for 4 months to fix that thing. That was a nightmare. That could have come down at any time. We have got hundreds of billions of dollars every year that we have to spend on our infrastructure just to maintain it. And here's a 10-year plan. And what I find laughable is that American politicians actually think that having a 10-year infrastructure program is a bad idea. It's just ridiculous. There should be a 25-year infrastructure program in place. It should be renewed every 5 years. And it should be done behind closed doors without any media and any cameras so that no one can gain a political advantage on it, and just pass the damn thing. But no, not going to happen. Not with a 2-year election cycle in the USA. There are people who are not in power that want to get in power and will say and do anything to get elected, even against the national interest. In other words, there are politicians that would rather be traitors to their own country and to be elected than to do the common thing and the right thing. But that's in Canada too. It's in the UK too. It's everywhere. Free economies or free societies allow dissent, and it can go right up to the line of traitorism. It's incredible. Anyway, the infrastructure program that they're trying to get through with the enhanced spending will actually add more capital to the economy of the United States over the next 10 years. Therefore, and thereby putting these markets at even higher highs, and therefore, and thereby allowing Americans who are sitting on $17 trillion of cash to say, oh, well, if the government's investing in my country, I'm going to invest in my country. That's what Americans are saying. That's what they're saying with their pocketbook. They may not say it in front of a camera when a reporter says, hey, do you agree with this? They don't want to say anything, because in America now it is dangerous to speak your mind in some places of that country, unfortunately. And so they just they vote with their pocketbooks. And $17 trillion is just being held back and is not available for the economy right now. That is bad news for job creation. That is bad news for taxes. There's bad news in red states, blue states, pink states, purple states. I don't care what color they are. It's bad news. You've got to get money moving to create employment and create wealth, because money turns over and turns over into more money. This is a positive thing. But yet, despite all this, the markets are at record highs right across the board. And today is supposed to be the big reveal from the chairman of the Fed, whether or not the interest rates are going up or not. Breaking news, there will not be higher interest rates today in the United States. The earliest forecast for interest rate increases are the end of 2022, the end of next year. It might start then. And at that point, everyone is saying, well, yeah, rates might go up a quarter point. That's it. A quarter point. Are you kidding me? A quarter point. That's it. Even if rates went up every year, 1% a year for 5 years in a row, we'd finally have 4, 5, 6% interest rates. Those of you with sterling credit will be able to borrow money at 2% less than the official rate. So if it's 5.5%, you'll get money at 3.5%. Can you afford your mortgage at 3.5%? I think you can. I think you can afford a car payment at 3.5%, especially if the car is discounted by $5,000 to offset the interest rate surcharge. You'll handle it. It'll be fine. Businesses will raise their prices to offset increased costs. They'll get away with it. It'll work out. It won't be a problem. The economy will grow dramatically, and money goes where it's safest. They go where they believe they can get the safest return on capital, because people are very finicky about their money. They're very careful about it. And there aren't very many safer places than the G8 or the G10 countries. Those are your top countries to go to invest comfortably. And that's Canada, the USA, Britain, Germany, France, the other G8s, absolutely. Where you don't put your money is you don't put them into third world dictatorship countries. You don't put them in countries that are run by dictators who say, "Oh, I'm an elected guy. I was elected by my population by 95% of the vote." Can we look at the ballots? Although we've already destroyed them. It's sorry, the vote's been held. It's okay. So the Belarusian economy, it might not attract a lot of investing because dictators who put people in jail for speaking their mind, investors kind of tend to shy away from places like that. China, they got themselves a problem. China right now is being told by the American authorities, guys, we have to see the books of these companies and the deep financial scenarios of these publicly traded companies here in the U.S. of your China-based corporations. Otherwise, we're going to have to delist you. And China is thinking, what can we do to avoid that happening? Oh, I know. We'll strike first. We will make it harder for our own companies to be publicly traded in America. And that way we won't have to worry about these American rules. The tighter the American rules get, we'll make it even tighter on our own companies instead. In other words, we'll slash our own throats before we reveal how corrupt we are to the rest of the world. We'd rather do that. And that's a smart thing for China to do. The Chinese Communist Party, if they're anything at all, they are very smart people. They are very smart people. They know for a fact that if the books are opened up to the outside world, the first thing we're going to uncover is corruption at to the highest level of the Chinese government and all other branches of the Chinese government, including the military. You're going to realize and figure out, why is it that the heads of many of the Chinese government departments are multimillionaires, are billionaires? These people only make $20,000 a year. How is it that they have this luxurious lifestyle? How can they afford to send their children to the finest universities on the planet? And how is it they can afford to have property, real estate assets outside of China in some of the most exclusive areas of the world? How is it they can afford Gulfstream jets in holding companies that they control? Because once we get into it, we can peel that onion layer back by layer by layer by layer, open up that onion and really get into it. The Chinese know there's no dang way that this is going to be allowed to happen. And so what we'll do is we will punish our own successful companies and in effect consolidate them back to the Shanghai Stock Exchange and maybe the Hong Kong Stock Exchange, rather than allow the outsiders to see what's really going on here, because we are not interested in the bribes coming out. We don't want anyone to know about all the payoffs, all the underhanded dealings you have to do to be a business person in China. We don't want to go there. To me, I am still shocked and amazed, really am, that North American businesses like restaurant chains, other companies want to actually open up shop in China. Because the amount of bribes and corruption you have to pay off under the table to these guys, the margins must be so good over there that they look the other way and go, yeah, well, we'll pay it. We'll pay the price to get in. They can write it off as quote taxes or fees or licensing charge, whatever the official word is. But the bottom line is the money these guys are paying are going straight into the pockets of the top guys in each area who run this geographical state or province or city or community. Bribes everywhere. No one wants that to come out. Not even North American businesses. They don't want that coming out either, because it'll show us that they're in collusion with the Chinese communist officials to pay bribes. No American company wants to be caught with their hand in that cookie jar. Same with Canada, Germany, France. Although in Germany, I have to say, it is kind of accepted that even at Siemens, they've been quoted over the decades going, well, of course you have to pay bribes to get into China. Of course you have to pay bribes to get into Kenya, Ethiopia, Senegal, Somalia. You want to do business in all these African countries? You want to do business in many other countries? You got to pay bribes. That's how business is done. It's been done this way for hundreds of years. We used to give gifts to the monarchy of countries as a thank you for letting us come and do business with you. That's called a bribe. That's all that is. It's just a bribe. That's all it used to be completely accepted. It used to be in the books of companies as promotion fees, expansion expenses, licensing costs. Today we bury it into all kinds of other fees, including consulting services. It might be paid to company X, that is a consultant to a company in America, and then that company X is a private entity that is actually headquartered in the Cayman Islands or in Switzerland or somewhere, and then that entity transfers fees to company Y, which is a Chinese-based entity that is owned by, surprise, surprise, the wife of the provincial director of economic development in that region of China. Wow, that's incredible. If you could layer that back, you can find out that the guy who ends up signing the permit to allow you to build a $500 million production facility in China, he got bribes through his wife, through a holding company that they have, through a Swiss company that does business with an American company that is doing it. Surprise! You're not going to get to that level. The Chinese government is not going to assist and help out any regulator in the U.S. get to that level. The only way you're going to get to reveal that is you have private PIs figuring it out. You have leaks figuring it out, but that comes out after the fact. And again, we move on. And if you can't do business in China, you'll do business in Sri Lanka. Can't do it there, you do it in India. Can't do it there, Indonesia. Can't do it there, Bangladesh. Can't do it there. We'll do it somewhere else. There's always a country open for you to do business in, where with enough consultation services paid for, you can do anything you want. And it's all legal. It's all fine. And there's no issues. And there you have it. Welcome to the World 101, those of you who are 40 or younger. What can I say? I've always wondered, as a grown-up guy, when I hit about, I don't know, 25, 30 years of age, I started asking this question of my father. I said, Dad, can you tell me something? I don't understand something. He said, what is it, my boy? I said, well, Dad, you grew up as a Lithuanian child, and then your family moved to Germany in the late 30s. And because of the relatives going back generations were German, because you left Germany, went to Lithuania, and came back, you were allowed in as Germans and all this stuff. And the Nazis were running the show by that point in time. He said, yes, they were. I said, well, I got this crazy question. I said, Dad, you have a Second World War going on the continent of Europe. He said, yeah. I said, but not everybody was in it. The funny thing about the war was, if you look at a map of Europe, you see Italy with the boot. That's run by Mussolini, and he's joined with Hitler now. He's part of the Axis powers. And then you have Austria that's been taken over by Germany. They just invaded it, took it over. Germany took over Czechoslovakia quickly and made that part of their world. They split Poland with the Russians. They cut a deal. You take half, we'll take the other half. We'll crush these guys. They went over and grabbed France, then Denmark and the Netherlands and all these all these regions. And then they grabbed Hungary and Romania, and the Russians grabbed territory. Everyone was happy. Everyone's happy, but there's this little island here. This little island, I can't figure this out. It's called Switzerland. Why is Switzerland surrounded by Italy, Austria, Czech Republic, France, Spain? Why is this island that doesn't have access to the Mediterranean Sea? I mean, you don't have ports on the Mediterranean. Why doesn't anyone invade these guys? Why are they neutral? How can they do that? How is it? Why couldn't Austria be neutral? Why couldn't Czechoslovakia be neutral? Why is it that the Swiss were able to be neutral and be surrounded by everybody else? And what about with Spain? Spain remained neutral theoretically, and Portugal. I'm trying to remember if Portugal is part of the Allies or not. I can't quite remember if they were that, but I know that Spain stayed out of the war. Ireland stayed out of the war. Northern Ireland's part of the UK. They were in the war, but Ireland proper was neutral. Why was Switzerland, in the middle of Europe, able to stay neutral? What? How can that be? He said, well, let me tell you a little more about that, my boy. He said, it was not uncommon for American diplomats to be in Switzerland. And it was not uncommon for German diplomats to be in Switzerland. It was not uncommon for Italian diplomats to be in Switzerland. They were all there. They were all receiving cable advisory information from their national headquarters. And occasionally they would meet there. through clandestine other intermediaries, let's say. Um, he said there were deals done all over the place in Switzerland to fund the war efforts. America needed cash. The Germans needed cash. The Brits needed cash. Everybody needed cash to keep funding their efforts. And Switzerland was more than happy to help everybody out because they're neutral. They're the banker. They're the clearinghouse. And it was a suspicion, a strong suspicion, by many governments that the Germans kept bringing bars of gold in all the time to borrow cash to fund its war operation. But people were wondering, where's this gold coming from? Because before the war started, the gold reserves of Germany were known to be a certain number. But as the war went on, gold bars kept showing up, more and more gold. Yet they didn't conquer countries where they were taking over a bunch of producing gold mines. How is it this responsible? Some folks were saying, well, we kind of know where that gold is coming from. There's a lot of people who are being kind of being eliminated from existence, and all their worldly possessions are being confiscated, and a lot of these gold pieces are being melted down. We know who this is without me saying it. But the bankers looked the other way and went, a gold bar is a gold bar. I can't break down the DNA of a gold bar to tell you where this or who this came from. This is just a melted down bar of gold. It has a certain value. And Switzerland was left alone. The entire war was left alone, and there was not a shot fired in there. Amazing how that works. Even in the so-called modern world, which was the 40s, this is the modern world, the 30s and the 40s, Switzerland was not invaded by the Germans. They could have taken it over in a week. No problem. They could have taken over Switzerland like nothing. Surrounded the country, cut it off, and they could have taken it out from all sides. Didn't touch it. Interesting how that works. Welcome to the modern world, everybody. Here we are. Switzerland is still an independent country, still neutral, and a very powerful banking operation. They're doing just fine. Anyway, there you have it. Thank you, everybody, for that. If you'd like to talk to me about a 1-hour session, you want to get together with me, send me an email through my email address, which is right here. It's the old school hotmail.com email address. Send me an email. Say, Bruce, I'd like to talk to you on a one-on-one session. When can you book me in? I'd like to make a reservation and lock it in right away.